Right, okay, story of the bulls and the bears. We've got a raging bull market going on with everyone flooding into the dollar at the moment. Ultimately, what we want to see is a little bit of weakness in the dollar, and what will happen is we'll get a pullback in the crypto market. So we've got the bear market in the crypto market and the bull market in the dollar. You can see that the dollar's making a series of higher highs and higher lows. The crypto market's making a series of lower highs and lower lows. So opposite effect, and what ultimately we want to happen is for us to get a big pull to the upside, we need a big pullback in dollar assets. So even a short pullback, this is the weekly chart, even a short pullback on the dollar is going to give us a chance to have a big rally in the crypto market. Not going to go to all-time highs, but we can look at some strong gains to the previous swing lows, and we're talking in certain instances hundreds of percent. So I'm going to show you guys indicators which are showing weakness in the dollar, and we're going to correlate that against the crypto market. The USDT dominance, which is a strong indicator that when people are coming out of US dollar tether, they're putting that into cryptocurrency. So that does correlate well with the DXY, and we're going to have a look at that as well. More importantly, I'm going to show you guys 3 altcoins I'm accumulating and what levels I'm accumulating and when I'm going to become more risk on in the crypto market. So let's stop wasting time, get straight into the episode. Enjoy the video, guys. Okay, when is this going to end? That's what we're going to talk about today, when we think it's going to end, because we've got some signals now showing exhaustion. Before we get into that, just want to thank every single one of you guys that have subscribed to the channel. 3,500 subscribers nearly. We're growing really quick, and I appreciate all the love, all the comments. Appreciate you sharing and liking the content. I do this for you guys. It's for you. It's free content. So if you do like it and you're new to the channel, consider subscribing, consider sharing it with any of your friends that you think might like the content. Let's get straight into what we think about the DXY. So exhaustion, we're on the weekly time frame here. Each one of these candles is 1 week, and you can see that we've had a double top. What I want to see when we get a double top is a reaction from that double top. You can see that you've had the candle that spiked straight up, and there's been a bit of a sell wall here, and price has been pushed back down below, and it has acted as resistance. It's going again for another time, and what we can do to try and get a confirmed double top is going at the lower time frame. And you can see on the daily, one important signal that we've got here is we've had a lower low, lower close candle at resistance, and you can see this red candle here completely engulfed and closed below the previous candle at a resistance level. So a bit of a green candle today, testing that. That's to be expected. It's Sunday. We tend to get a Sunday dump with the crypto market, and that correlates with a little bit of strength in the dollar on the Sunday. But I'm expecting this to have a bit of a turn to the downside tomorrow. So back to the weekly, a couple of indicators showing further exhaustion. You've got your RSI. We've got a stochastic cross just happening right now, which is showing probably a downturn on the oscillator indicator and a downturn in momentum. So if I just get rid of these, I'll show you a couple of other things. So we've got a couple of divergences going on with the RSI2, where price action has made a series of higher highs. Price action's made a series of higher highs, and the oscillating indicator and price momentum indicator have made lower highs. So that's showing a signal of weakness in the dollar, and this is the higher time frame, don't forget. So it takes a full week for each one of these candles to play out. So we've got the daily time frame, we've had the lower low, lower close, and it looks like a confirmed double top on the DXY. I'm expecting a pullback. One thing that we can look at is the USDT dominance, and you can see that we're at resistance. We've had a reaction from our resistance level, and we're pushing back. So if we go, see on the daily is similar. We're at resistance again, and we've had that reaction at resistance. And I just want to show you something that's interesting and how these markets do tend to correlate. So this is the USDT dominance, don't forget. So US dollar tether dominance. And this is last Friday. See this spike here last Friday. At some point, price action has pushed up. Momentums look great on the USDT. Everybody's fearful. Everybody's cashed in their Bitcoin and their altcoins into USDT. And what happened was the market just sent a big middle finger up, and we had the opposite reaction here. So price actions pushed all the way back down hit a level, and the buy orders have just pushed straight back up, and we ended up with the bullish candle. So you see how you have the opposite effect. And I just wanted to, first of all, before we get into the altcoins, just show you that I can see exhaustion in the dollar. We might get a pump up, but ultimately we're on the higher time frame. We're looking at the higher time frame, and there's certainly weakness there. There's a loss of momentum, and we're also at strong levels of accumulation in the crypto market. So there's not too much downside as far as I'm concerned on the crypto market, or as far as I know. Ultimately, the markets do whatever they want, and it's not financial advice. But I want to show you 3 examples of altcoins that I'm accumulating. One example of something that we talked about in last week's episode, where you get the pothole effect, and we can possibly take advantage of that. So let's get straight into that now. Now we know this state of the market. Now we know that there's a bit of a loss of momentum. We're a little bit more risk on. We're not fully risk on, but we're starting to dip our toe in the water at the moment. So let's have a look at these altcoins now. Okay, so this is what you've been waiting for, the altcoins, my 3 altcoin picks of the week. We start with Phantom. Before we get into it, I just want to explain that what we're looking to do here on the macro scale is we're looking to counter trends. So we're counter trending altcoins against Bitcoin pairs. We're counter trending altcoins against USDT pairs. And when we're at an accumulation phase, this is where we can take advantage of that. But ultimately, we need to prepare ourselves for something to go in the opposite direction of how we've prepared our move. So if, for instance, the market went sideways in an accumulation phase like that and then dipped down, we need to take advantage of this and bring our average price down as much as possible. So I'm looking at diversifying a small part of my portfolio into these altcoins, and then not all of my position all at once, because if I'm wrong, we can take advantage of being wrong and bring our average down. And I'm not looking to hold these long term. I'm looking to take profits at the next resistance level, which is in this case 91.99, so pretty much 92 cents. And that's a move from where we are now. That's a 330% move. So I'm looking to hold. It's going to be medium term hold, and that's where I'm going to be looking at offloading. And once I do offload into that, I'm going to wait for the market to pull back and go into more off risk assets such as Bitcoin. I'll keep some of my dollars as dry powder for opportunities when these arise again at a later date. So bringing our average down and dollar cost averaging at these levels, when there's an opportunity that arises, when there's a bit of a crash in the market, you got your buy orders set here, you're bringing your average down, and ultimately you'll get bigger gains when you take it at the next resistance level. So we're not riding the market. We're still in a bear market. We need to respect that we're still in a bear market. And what we're looking to do is counter trend. So just accumulate small amounts of your portfolio, not financial advice, something that I'm doing myself. And that just completely makes sense to me. So that's Phantom. We'll have a look at the next one, which is Algorand. Right, this is Algorand. I like Algorand. It's got a lot of data to go by. It goes all the way back to 2019, so it's got a lot of historic information to go by. You can see how these levels are respected with the longer data, so it's something that I like as far as technical analysis is concerned, and this is one of the reasons why Algorand's one of my picks this week. So we've got Algorand currently trading at 32 cents. Its all-time highs were at... Well, it actually had its all-time highs from this run was $2.97, but it actually, when it started trading at $3.43, certainly on the Binance chart anyway. So it did have highs previously before that, but as far as this run's concerned, the highs $2.98, just under $3. So currently trading at 32 cents on Algorand, and it's an area of interest for me. And you can see where I would want to buy Algorand is at this support level here, which is at 28.29 cents. So if you're accumulating at this level, 28.29 cents, you've got your buy orders at 20 cents or 19.5, 20 cents for the second amount of your position, and you're preparing for that. So you've already got the buy orders set at that. And then ultimately, if you do manage to get that wick to the downside, which gets picked up, you'd be bringing your average at around about 24, 25 cents. So next resistance level, I've got 2 areas of interest on Algorand. First resistance at 44.92. So this is going to be take profits 1 for me. And the second resistance level's at 56.75. So it's a little bit more conservative in comparison to Phantom. And the first level of resistance is 38% from now, or 38.53%. And the second resistance level take profit 2 is 73%. So a little bit more conservative. The previous major swing low, which we could use as a take profit zone, but I'd just like to be a little bit more conservative in a bear market, so we don't we don't look for the large gains. We just look for the conservative gains. Phantom's a little bit of a funny one because Phantom's had such a downside during the course of the bear market, and it's accumulating at really, really low levels. That the next gain and the next level of resistance is the 333%. But next major resistance level at 110% on Algorand's trading at 68.35. So that's Algorand. We'll have a look at the last one now, which is Cardano. Okay, I kept this one last for a reason, Cardano. Why do you think that is, guys? You can see Cardano at its top was trading at 310. Why did I keep this one last? So we've been trading in this range now for a total of 161 days, and we've broke to the downside. It's Sunday today, so the chances are we're going to get this candle close here. What does that mean? Opportunity? Possibly so. Next level of support on Cardano, currently trading at just over 30 cents. So if you were buying and accumulating, which a lot of people were, whether it's private, retail, or institution, a lot of people were buying at these lower levels of this range. And you can tell that by these long wicks here. That's buy orders pushing price action back up. So there's a lot of people been buying at this area. And I was one of those people, not my whole position, small amount of my portfolio. But ultimately, I was prepared for this to happen and move to the downside. And I've got buy orders set now at 30 cents, waiting for a close below this and a little bit of weakness to the downside. And if you do get the wick, it could happen in minutes, it could happen in hours, but the chances are you're not going to be at the charts to take advantage of that. So that's why it's important to have the buy orders set at these levels and not have your whole position in here. Because the next level of resistance on Cardano from where current price action is gains of 114% from where we are now. So if you can bring your average down and take advantage of these moves, you see it hasn't happened in Algorand, hasn't happened in Phantom. If it does, we take advantage of it. If it doesn't, we haven't got our whole position in, but we've got some of our position in the market and we've got it in at a good level. So this is why it's powerful. And this is a medium-term strategy because we're going to be offloading at these levels, or certainly I am anyway. We're going to be offloading at these levels, waiting for price pullback. And when we're at a support on off-risk assets, such as Bitcoin, I'm going to be putting my profits into Bitcoin and off-risk assets, such as dollars. And I'll be keeping part of my position in these, but ultimately I'll be taking my money back out. And that's what I want to be doing, is rinsing and repeating and positioning myself for the next bull run. So I hope you enjoyed the episode, guys. Don't forget, subscribe if you do like the content and you're new to the channel. Share it with your friends. It really helps the algorithm. Enjoy the rest of your week. Take care of yourselves and goodbye.